The latest financial headlines from the Czech economy are that it keeps shrinking and is lagging behind its Central European peers. But is this contraction a temporary blip? Joining me to discuss is Petr Gapko, Chief Economist with GE Moneybank. Vladimir Tomšik, the Vice-Governor of the Czech National Bank, said there was 1 quarter of revival, and the flash estimate for the third quarter shows we may return to recession. Mr Tomšik also hinted risks could eclipse the record-long slump it exited this year. However, other analysts believe the data could be easily reversed. Which side of the economic fence are you on, Peter?
I believe that the negative reading of GDP in the third quarter for Czech Republic was just a one-off event on the path of recovery. The Czech Statistical Office indicated that the decisive factor for this decline was a negative contribution of net exports. That means our imports grew more quickly than exports. This might indicate that companies producing in Czech Republic are starting to refill their inventories. Having said that, and looking into our main exporting market, the growing German economy, I think that going forward, the Czech economy will utilize increasing demand from Germany and will continue its started growth path from the second quarter.
When the PMI figures for October were published at the beginning of this month, HSBC said production had risen at the strongest rate in 2.5 years because of a further robust increase in new orders. Also, the bank said companies had increased their staff numbers at the fastest rate for more than 2 years. So how real is the risk of deflation in the Czech Republic to your mind?
Unfortunately, at the moment, we don't see any demand inflationary pressures. That means that consumption is, on one hand, stabilized, but it's not growing and it's not supporting the growth of prices and profits of Czech companies. This definitely might result in a period of deflation. However, if we take into account the last step of the central bankers, I don't think there is any space for a further decline of consumer prices, at least in 1 to 2 years period.
The central bank began the first corona sales in 11 years on November the 7th to keep the currency near 27 per euro. Another board member said he can imagine a scenario that would force policymakers to change the intervention rate to 28 per euro. But is this really sustainable? How low can the corona go and for how long?
The central bankers indicated that the period could be extended and might take 1.5 to 2 years. This means that they are determined to hold the corona at least 27 per euro for quite a long period of time. This is definitely sustainable as the central bank in Czech Republic is a monetary authority and has got basically the unlimited supply of Czech koruna.
Hungary and Poland both posted robust growth statistics in contrast to the Czech Republic. What do you make of the suggestion that the CNB's currency intervention could spark a fresh currency war within the region, should neighbouring countries' exports begin to feel the pinch?
I don't think that the monetary interventions against Czech koruna will start any kind of currency war, because the intention is not to somehow artificially support the growth of the Czech economy. It's just aimed to fight the threat of deflation. Therefore, I think that this is a legitimate step of the Czech National Bank, and other central banks will not follow.
Peter, thank you so much for your insights today. It's been lovely speaking to you. Well, that's all from me for the moment, but for more currency forecasts, click back for this week's last edition of Targets in Focus with my colleague, Dara McDermott. Goodbye for now.